Next one, big tech. Certainly getting hard hit recently, but our next guest says it may be a good time to buy at least some of them. Come on in, Ray Wang, founder of Constellation Research. Ray, I want to go through these one at a time real fast. First of all, Apple. You like it? You want to buy it? Where's it going? It's at $219 now.
You know, we see that's going to be 240 by the end of the year. One of the things, look at the low PE ratio. And the other piece that's really important is the services part of the business. Apple Care, all the other areas that are happening around the iStore, all those areas, it's almost a $9 billion business. We think they can take that up to $20 billion by like 2020 because they can grow that other area to be just as big as iPhone shipments in a non-launch quarter.
Okay. Amazon. You know, right now, I think it's about $1,800 a share. You like it. Where's it going?
You know, I think it's getting to 2,000. One of the big pieces is we haven't hit the Christmas season. They've actually made a lock-in on the workers that they need to actually supply the Christmas season. But more importantly, when they announce their new HQ, it's going to be a low-tax state. They're tired of being shafted by Seattle and the tax implications that are going on. So they're probably going to find a low-tax state and, like, rechange their HQ structure.
Oh, I like the emphatic language there, Ray. That's pretty good stuff. Okay. I won't repeat it. Netflix. I'm not sure exactly where it is now, but I know you like it. You're going to tell me it's at $349. Tell me where it's going.
We see Netflix getting to about 400. One of the reasons it's doing really well is you saw the 7 million subscriber ad, a lot of it coming from international. Estimates are about 9.5 to 10 million more ads in Q4, and that's actually driving their growth rates. And also, they've been able to hold ASPs, and they're doing a lot of work on content. All these big tech stocks have one thing in common. These are digital cores where we have lots of users on a daily active basis, and those users are doing more than one business model.
Okay, now, I'm looking to the future. There are some very interesting technology companies that might be going public at some point in the future. That will be where you and I can actually buy stock in these currently private companies. Let me start with Airbnb. Now, that is a giant. I don't know when they're going to go public, but you would want to buy into it, correct?
You do. Same dynamics. 5 million listings, 2 million actually every night being used. And it's one of those areas, it's worth $31 billion is current the valuation. And when they go out, it's going to be more than just Airbnb. It's going to be other things. Anything from private jets, anything from even rides they could get into the market that Uber's in. But the point being is they've got a subscriber base that's huge, and they've got a lot of listings, and they're the dominant player in the market.
Okay. Tell me another currently private company that's likely to go public probably next year and that you like. What do you like?
You know, Palantir is an interesting one. It's kind of like the Cambridge Analytica for the spook world. They did the data mining to track down Osama bin Laden. And what they have is a really, really powerful platform that helps you identify patterns that you wouldn't normally see in the marketplace.
Wait a minute, what's
That's
that,
a great
Palantir?
one.
They're a data miner.
Palantir. They're a data mining company based in Palo Alto, founded by Peter Thiel.
Okay, tell me about Lyft and Uber.
So Lyft is doing it's probably a $15 billion valuation. The ride-sharing, ride-hailing service is a market that everybody wants to get into. Both Uber and Lyft are jumping in with IPOs planned for 2019. Uber is worth $120 billion. They've got this thing where they've got to get out by the end of the year to meet the SoftBank requirements for their $100 billion valuation. It's going to be interesting to see if they get there, but think about it. Uber has 75 million users, 3 million drivers. They've done 10 billion rides in 600 cities. That's the type of digital scale you're trying to look for in these marketplaces.
My only problem is
winner-take-all markets.
My problem is that it's the initial investors, the private initial investors. They get most of the money here, as opposed to us retail investors who get in late in the game. But I know there's one more. I want you to tell us about it, and that's SpaceX. Make your case.
Well, SpaceX, it's going to be a $28 billion valuation, but I think they've publicly said they're not going to do anything until they take their first trip into space. So we'll have to wait a little bit for that one. But if you want to get in early, I think you'll have to go into the private rounds for that one.
I know, I'm probably not going to be there. Ray, very interesting stuff. We always appreciate it. Thanks for being with us, sir. Okay. And remember, you're on videotape, so if we don't work out with Apple and Amazon and Netflix, you're in trouble, sir, now.